Okay, welcome to this episode of From the Field. Thank you for joining us. I am Brittany Hurst-Marchant from the Idaho Wheat Commission, and we are joined today by Mike Spier from US Wheat Associates out of their Portland office. And I will give him a second to introduce himself after I wrap up this opening spiel, which if you've joined us before, you know, but you are welcome to ask questions. You can do that by either unmuting your microphone, using the reactions at the bottom of the screen to raise your hand, or you can type your question into the chat for Mike, and we'll make sure that it gets asked and answered. Mike, go ahead and tell us a little bit about yourself, your background, and what you do with US Wheat Associates.
Sure, great, thanks. Yeah, thanks, Brittany, and thanks again for this opportunity to meet and join your session today. As Brittany mentioned, Mike Spier, the Vice President oversees operations for US Wheat Associates. I've been in the grain industry for about 30 years. About half that time was on the commercial grain side. I worked for two of the major exporters in the Pacific Northwest. And then the other half of the time was with US Wheat Associates. I started in our Portland, Oregon office and then moved overseas with US Wheat. I've worked in our Cairo, Egypt office, covering the Middle East, East Africa, the Philippines, covering the Southeast Asia region, and then also in Singapore. We're also covering the Southeast Asia region. And then I joined Columbia Grain and set up an office for Columbia Grain in Singapore, moved back to the US with Columbia Grain, and then rejoined US Wheat to head up our overseas offices back in 2019.
Oh.
Yeah. So
you've lived pretty much everywhere, haven't you?
I have, yeah. So different countries, about 20 years overseas. So, but grateful to be back in the US. So.
Well, Mike, let's talk about what we're here to talk about today, which is supply and demand in the wheat market. What are you seeing out there? Is there anything particularly alarming? What are we looking at for, the past year, the next year?
Yeah, I think the past year, I think, some of the major factors that have affected trade, obviously the big one when Russia invaded Ukraine, and that kind of really sent a lot of uncertainty around the world, shipments coming out of the Black Sea. And over the years, Russia and Ukraine, Black Sea shipments have become increasingly more important on the world stage. Prior to the war, Russia and Ukraine accounted for 26% of global trade. On average, 3-year average prior to the war was probably, I think, 54 million metric tons. So when Russia invaded Ukraine, that, as we all know, sent a lot of uncertainty. We saw extreme volatility in the markets. And that's still, we're seeing that today as well. I think some of that volatility has come down from last year's record levels, but it's still there. So I think that factors. I think another factor also we're seeing is the strong US dollar that has an impact on US agricultural products. It's kind of been a headwind, I think, for US ag exports over the last year at least, I think, because it makes US commodities more expensive for buyers overseas that have to use their local currencies to purchase US dollars. And so we're still kind of seeing those factors today. I think with one kind of, a surprise, compared to where we were looking at it after Russia invaded Ukraine, was the amount of wheat that's actually flowing out of the Black Sea. I think it's a lot more than the market expected, even though we had, several times where the market, because of the Black Sea Grain Corridor Initiative that was negotiated by Russia, Turkey, and the United Nations, which opened up some exports out of the Black Sea, we still saw, I think, a lot more wheat coming out than expected, which has been, we've been pretty bearish on prices.
So when you say that more was coming out than we expected, do you mean more was coming out of Ukraine than we expected, or out of the Black Sea region as a whole, including Russia?
Yeah, that's a great question. I think it's the combination. I think, looking at, I think at the time when Russia first invaded Ukraine, nobody really knew it was going to come out. But we saw Russia had record exports, and there was more volume also coming out of Ukraine than expected. I think if I mentioned that prior to the war, their average exports were 54 million metric tons. I think combined exports in the last marketing year, 22-23 marketing year, combined exports of Russia and Ukraine were 63 million metric tons. So more than exporting prior to the war. And the percentage of world trade was 29%, which was also higher prior to the pre-war levels. So I think that was more than people expected.
And what about Australia? How are their exports playing into all of that also?
Yeah, another great question. I think those two, you had Russia last year, as well as Australia. Both of them had record production levels. Australia, after I think 3 years of really some bin busting crops, where they've had 3 consecutive record crops. They had La Nina weather conditions the past 3 years, which provided a lot of moisture, a lot of rain, and a lot of timely rain that really helped the production of their crops. This new marketing year that we're going into, production out of Australia, because they are shifting into an El Nino weather pattern, which brings hotter temperatures, drier temperatures, and probably less rainfall. Their production is projected down to about 26 million metric tons from last year, 40 million metric tons. So a 14 million metric ton decrease in production. And exports, that'll also impact their exports. Last year, record level of exports out of Australia. This year, down probably close to 40%.
How are those changing weather patterns from La Nina to El Nino and back again? I can never remember which one we are currently in and which one we're going into, but how do you expect, or what are the projections for US wheat crop going into a new weather pattern?
Good question. I will fully admit I'm not a meteorologist, but I think it's, I think we're hopeful that it's going to provide some more moisture, I think, in the southern plains, or at least where we've had those extreme temperatures and droughts. But again, I'm not a meteorologist, but hopefully we do have some better moisture levels for our winter wheat production.
Well, you're not a meteorologist, but I think anybody's guess is probably fair game at this point, right?
Exactly. Yes. Yeah. Yeah.
So if we talk about US wheat supply, what are some trends that we've seen over the past 5, 10, however many years that are maybe, I know a hard red winter, for example, is the stocks for hard red winter are much lower now than they have been in the past. What are some of those trends, and what should we be aware of, or what catches your eye?
Yeah, I think trends that we've seen. I think over the last 3 years we've had drought years in different production areas that have really limited, I think, the production of wheat in the United States. On the other hand, we've had stable domestic supply, or domestic consumption, very stable domestic consumption, around 31 million metric tons. And when you take that and you add in our exports this year, projected around 19 million metric tons, the last 3 years we produced less than our domestic consumption, and exports are outpacing our production. So it's led to a decline of our ending stocks. I think over the last 5 years, ending stocks are down probably about 43%, total ending stocks. And as you pointed out, I think it's been a little bit tighter even situation for hard red winter wheat. Hard red winter wheat stocks, because of those droughts we've had in the Southern Plains, hard red winter wheat stocks are down about 40% from the 5-year average. So tighter supplies. That's also why we're kind of seeing in terms of prices of hard red winter wheat. Hard red winter wheat last year was really trading at a premium over several of our competitor origins pretty much throughout the marketing year. And one of the major reasons for that is that tighter balance sheet of the hard red winter wheat class. But yeah, again, as you mentioned, you talked about overall, our all stocks of wheat are tighter compared to where we were 5 years ago.
And is that just weather related, or what are the other factors that play into that?
I think change and shifts in acreage patterns is one, weather as well. And then again, that, we have had that stable domestic consumption of wheat and exports as well. So just not being able to, for production to keep pace with our combined exports and consumption. But yeah, I think, everyone probably on this call realizes that we've seen, the last 2 decades, a drop in wheat acreage, at the, more acreage of corn and soybeans planted.
Mike, with a lot of farmers around the world experiencing extreme heat, extreme drought, extreme moisture, with the effects of the Russia-Ukraine war, nobody really knows how long that's actually going to continue. And the question I get often from people I know is, are we going to have a wheat shortage? Is there a wheat shortage? Should we stock up on wheat? What is your answer to that?
You're talking about in worldwide? Yeah.
Correct.
So yeah, that's a great question. I think, it's interesting if you take a little bit of a longer term look over the last decade, we've seen world wheat production trending higher over the last decade, even though there hasn't been a significant increase in planted area around the world. So I think that, even though stocks are tighter, world stocks are tighter, and stocks are tighter of the major exporters of wheat, probably the tightest level that we've seen in at least a decade. So I think that there is still sufficient supplies of wheat around. So I don't think there's any need to store up on it. A matter of fact, if you look, I think at the buying trends, flour millers overseas, they've kind of seen wheat prices over the last 12 to 15 months, kind of starting back, I think, of June, July of last year, wheat prices have been trending lower. So some buyers overseas have been shifting their buying strategies more to hand to mouth, because rather than buying 3 to 4 months out, because with the prices going lower, if they've waited, they've been kind of rewarded by lower prices. So that's kind of the way the market is going now. But with those tight supplies and of the major exporters, and then you take into account, I think Russia's exports, record exports last year. Sounds like the first quarter of this marketing year, Russia's exports are near record levels. So the wheat continues to flow out of there. But, we've also seen a shift in Russia taking control of the government of Russia taking control of wheat exports. Multinationals have stepped out of that. So, and that is a little bit of a concern, because you look over the last decade where we've seen significant spikes in wheat prices have been at times where Russia has put in export taxes, export quotas. So that is a little bit concerning. And I think definitely a situation for farmers, and we're, reminding flour millers overseas to keep an eye on.
Corey, it looks like you have a question. Go ahead.
Yeah, I'll kind of piggyback on that question. From a farmer standpoint, outside of the high dollar, I see high commodity prices, tight global stocks to use ratios, poor crops, definitely in our wheat growing regions in North America, and a war that seems to be escalating, and yet the market doesn't give two craps about any of it right now, as it's just been flat ugly for 2 months. So kind of with what you were saying, one, does supply and demand not care or matter as much anymore when we got hedge funds controlling this market? And two, is the entire world just think if we need it next week, it'll be here next week? Like you say, that hand to mouth, is that the new norm for what we expect? I just trying to wrap my head around why this market just keeps tanking.
Yeah. Great questions, Corey. I think that, what I was looking, at the numbers, as you talked about, the stocks to disappearance ratio tighter. If you look at the stocks to disappearance ratio of just the major exporters, we haven't seen this level. I think it's at 13%. If you just look at the ending stocks of the major exporters, lowest level we've seen going back to 2008. Never remembers what happened back in 2008 where we saw prices spike. So, it's really kind of stepped out from the norm. And normally that stocks to disappearance ratio, a lower number has been bullish for the market, but we've kind of seen the opposite of that. And I think that goes back to right now, the wheat is flowing out of the Black Sea, Russia, is flowing out of there. But, I think that, going forward here and, I think depending on what happens in Australia, that's a huge shift in supplies with Australia production coming off the last 3 years. So it doesn't seem like we should be at these levels is what you're saying. But I think, buyers overseas are comfortable right now kind of, at this hand to mouth approach, but I don't think it will take much. As you also pointed out, you talked about the funds. I think the funds have some very large short positions, particularly in Chicago. So, any type of quality concerns, production issues, you get something that happens in the Black Sea that stops that flow of wheat. I think there's a lot of upside risk potential for prices going, if that does happen.
Okay, we have a question in the chat, Mike. What are the soft white wheat trends? You talked a little bit about hardwood winter and overall, but specifically soft white wheat trends, and then I'll have a follow-up for you from that.
Okay. Trends, and I think in soft white wheat, I think we're seeing soft white wheat this year has become more competitive. I think primarily with the major competitor for soft white wheat is Australian standard white. Australia's lower protein. I think with Australia's production and exports lower, we've seen the price spread, the FOB price spread between soft white wheat and ASW narrow, which I think is a positive trend for soft white. If you look at this same time last year, soft white wheat prices were close to $100 per metric ton higher than Australian standard white. Today, based on U.S. Wheat Associates price report last week, soft white wheat is actually about $20 per metric ton cheaper than Australian standard white. So I think that that's positive, particularly for our markets in North Asia and Southeast Asia. Will create some opportunities for soft white wheat. U.S. Wheat Associates staff has already been, I think, kind of out ahead of this and has been working with buyers in North Asia and Southeast Asia, working with flour millers to increase the blend ratio of soft white wheat. For some of those mills that the last couple of years shifted to using more ASW because it was cheaper than soft white, now getting them to shift back to increase those blend ratios of soft white wheat in their flours.
And this was a two-part question. What is the biggest need you see for U.S. wheat farmers?
The biggest need?
Need, yes.
In terms of exports or?
Yes. I'm guessing. Matthew, if you want to jump in and clarify your question.
Sure. Just like if you could wave a magic wand or farmers could wave a magic wand, what would we get to get higher prices and more customers, I guess?
Higher prices for farmers?
Yeah.
Yeah, that's kind of a double-edged sword there, because you get higher prices, then we have a little bit of less on the export opportunity. But I think, in terms overall, for total U.S. wheat exports, for farmers, magic wand, increased production, more supplies of wheat. I think that would be one.
And Mike, kind of to piggyback off of that question, what is we talk about how our wheat stocks are lower, we have less than we've had, in several years. What's the main message that you would send to buyers about that?
I think about our tighter stocks, I think is, not, I think kind of keep in contact with our U.S. wheat offices where the export trade, because when we do have these tighter supplies that we're seeing now, I think even, and Corey brought it up, he kind of just mentioned that, do buyers just think the wheat's always going to be there? So I think it's important. And I think over the years, U.S. wheat has done an excellent job working with buyers to remind them to keep a pulse on the market, to keep a pulse on stocks. Particularly, now we're getting into October, November, December, which are also prime export months for corn and soybean shipments. So it can be a very busy time on the export side. So, it's important for, I think, buyers to keep those connections. And also, I think it's also so great to have the trade teams visit Idaho, the states, the wheat commissions as well, because they can also make those connections too. And they come, during the summers. I know you have a team coming up. They can see the wheat, see the harvest firsthand, which I think helps them a lot in terms of their, procurement strategies going forward.
Yeah, I really think it's cool that U.S. wheat, it's farmers may not realize this, that U.S. wheat has 16 offices around the world. Is that the right number?
13, I think it's 13.
13.
Yeah.
Okay. You mentioned a few that you have worked in Egypt and Singapore and Mexico and different places. But with those 13 offices, that means that U.S. Wheat has representatives on the ground to build those relationships with buyers and kind of to make sure that U.S. Wheat has markets to go to.
Yes. Yeah. That's a great point. I always kind of make the comment. It's not a joke. It's real that, basically with our offices overseas around the world that you mentioned, almost 7 days a week, 24 hours a day, it's very likely that there is somebody from U.S. Wheat that is talking about U.S. wheat exports, either on production side or purchasing side, on the technical side, which I think is, comparing that to other competitors, other origins, you really don't see that.
Yeah, there's just so much work being done, behind the scenes that we don't know about, and
yes,
we're tied into it. So,
right.
Definitely farmers who are a little bit, have a little bit more distance from it because they're doing their job, wouldn't know that those things are going on.
Yeah, that's a good point. And I think that, over 30 years in the business, I think the last couple of years, last year for sure was probably the most challenging time in the markets that I've ever seen. And, it makes it a little bit more challenging too when you look at the volumes of exports projected out of the United States, below average. We're talking, the USDA is estimating this year exports at 19 million metric tons, which would be the lowest level going back to the 1970s. So, it's challenging at times, even when you have sufficient supplies to export of U.S. wheat, because we're not always the most competitively priced wheat, but we have the highest quality wheat in the world. And so I think our staff overseas, this past year, even with lower exports, we haven't been as competitively priced last year. Our hard red spring wheat was higher than Canada. hardwood winter wheat was higher priced, trading at a premium to Russian wheat or French wheat or Australian medium protein wheats. And our soft white wheats last year was also trading at a premium to Australian wheat. So that, is definitely a challenge, but I think that our staff overseas does an excellent job reminding buyers why it's so important to not only focus on price, but also look at the quality, the value, and the service that they're receiving when they buy U.S. wheat.
Mike, I know U.S. wheat contributes to the global wheat supply. I know the demand for wheat has been steadily growing. With the U.S. wheat representatives in some of these countries, maybe that have a population increase in these lower income countries, some of them are switching from a rice commodity to the wheat commodity. Do you foresee that demand for wheat globally steadily increasing?
Yes, I think so. I think, in particular, you touched on a good point there. Particularly, we see that in Southeast Asia, where the consumers are shifting from rice to more wheat-based products. And I think that that's an advantage for U.S. wheat because we have that higher quality wheat. I think not only in Southeast Asia, but other markets around the world where you're seeing a shift driven by the consumers that they want higher quality products, better value products. And that's really where I think we have an advantage over other origins is because of our quality wheat, the quality end-use characteristics that we have to make the wheat-based products that are growing, the quality products. Really, you need U.S. wheat for those products.
How much longer do you think we can get away with that sales pitch? It seems technology moves so fast, varieties, breeding, whatever you want to say, it doesn't take long for a Brazil or, I'm talking corn and soybeans or something like that to steal our genetics or take our genetics. I just worry that we're not going to be able to go with the U.S. wheat is higher quality very much longer. So I don't know what our backup plan is. We got to be cheaper, I guess.
Well, I think we'll have a hard time being cheaper, but that is a good question. But I think, I remember when Russia came on the scene, that was the problem. Oh, Russia is going to, have similar quality wheat that the U.S. does. Their quality has definitely improved over the years, but it's not there yet. I think, fortunately for Idaho, a lot of the soft white wheat producers, there's really not a soft white wheat out there that compares. So I think you're in a good spot there. But that is a concern. How long that takes. It does. I know we have some readers on here. I think on here that does take a long time. I think to catch up on that. So we'll need to. Yeah, but that's a good question.
And it's not just increased populations that are kind of driving that demand. It's also population ages, right? And the trend we heard a lot this summer in North and Southeast Asia is those populations are getting older and are requiring different diets than they're used to.
Right. Yeah. I think that's right. I think you have a little bit of older population percentage wise in North Asia, Southeast Asia, very young population that is, really has embraced wheat-based products and high quality products as well. And so that has definitely, I think, been helpful. If you look at, I think as of today, I think U.S. wheat export sales, a majority of the regions export sales this year versus last year are down, but where we're seeing a higher percentage of commercial sales this year compared to last year are in North Asia and Southeast Asia. So, I think it just reminded me too, back on Corey's question, when you look at our top 10 destinations, our top 10 customers this year of wheat, they represent about 70% of our total exports. So I think that, we're continuing to focus on those markets, and those markets are really, they're not just price buyers. Everybody buys based on price, but the quality, value, and service is very important to these markets. And again, those are 70% of our exports.
Mike, kind of piggybacking off Corey too a little bit, is there something that the industry should be focusing on or looking at long term? Kind of, you're talking about the quality, but is there something that we should be thinking about that's going to be important in those next 10, 15, 20 years that maybe we're not looking at now?
That's a tough question because it's a tough question because I think that the industry has done a very good job of looking in the future. I think that, we've seen industries, we've seen, expansion of capacity for that future growth. So we can always continue to be that reliable supplier. On the infrastructure side, we've seen on the railroad side, investing in infrastructure as well to help maintain those supply chains that we have. So off the top of my head, I can't think of anything that we need to be doing that we're not, but I think we have such an efficient industry that they're really done a good job looking ahead.
Thank you.
Right. Well, Mike, we have hit our 30-minute mark, which is about how long we like to keep these going. That went very quickly. So thank you again so much. Is there any last bits of wisdom, any last points you want to bring out about supply and demand?
Wisdom. Yeah, where's my crystal ball? I need to borrow that from Vince Peterson. He's got the crystal ball there. So I would, I think just, I know this is a busy time of the year for producers planting, harvesting. Some are still harvesting too. I think just, keep an eye on the markets. We are pretty tight when you look at the stocks, particularly of the major exporters. So it's not going to take anything major to, kind of shift things more to the upside. So I think, again, I appreciate this opportunity, this type of forum, I think, where you can ask questions is very helpful, I think. And, hopefully some information I provided today helps, and happy to do this again. I've really enjoyed it. So thank you for this opportunity.
Well, thank you so much for joining us.
Great questions.
I think we all learned something, and lots of good questions came out of this. So, and good answers on your part. Some of them were out of nowhere for you. So thank you so much for joining us, and we will remember that you are happy to do this again in the future.
Yes, yeah. Look forward to it. Thank you for everything you do.
Thank you, Mike. Thanks for keeping wheat flowing.
Yes. All right.
All right. Thank you
Thanks.
so much. This episode will be available on our social media platforms, podcast channel, and YouTube channel. So you can go ahead and watch it later, listen to it later, or share it with your friends and neighbors. And thank you for joining us. And we'll see you for our next episode of From the Field in a couple of weeks.
Thank you.